In today's video, I'm going to have a quick look at the independent investigations that are being called for in Wuhan. I'm also going to be having a look at what is going on with earnings season and some of the calls that have happened and the figures around it. In addition to all of this, I'm going to give you my perspective on the pound dollar. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing I always try and have a look at is what's going on with COVID-19. We've now got more than 3.1 million infections globally, we've had more than 210,000 deaths, and we've had the recoveries rise up past 900,000. Now, interestingly enough, this is obviously good signs on the recovery side of things, but we still have a little ways to go. The interest is that we want to see that we have more recoveries occurring on a daily basis than what we do infections, and naturally deaths as well. So that is something to keep looking forward to. It might give us an indicator on when we might be getting to the middle point or the horizon, and we might be able to see a little bit more light at the end of the tunnel in some not too distant future. When it comes to the independent investigations, there's been quite a few calls for an investigation to occur to see where the origins of COVID-19 have really happened and what's been going on around that. This includes having a look at what the WHO have done and sort of what's going on around it in China at the very early onset and how it spread across the globe so rapidly. So now we have the US, Europe and Australia having all called for an independent investigation of some kind to occur. China seems to be quite hesitant to do this and are not interested in sort of partaking in it or allowing it to occur, which does raise suspicions on a lot of people's fronts. The other aspect of this is they are actually pushing towards a threatening way of sort of pulling trade agreements. And now for Australia, this is a big issue. They are and contribute towards more than 30% of our trading exports. So naturally, our economy is quite heavily reliant on what goes on out of China and their investment into Australia. If this is to occur, then we can expect to see quite a significant drop in GDP potential, and we'd have to re-estimate on what those earnings might be post-COVID-19. At the moment though, the tensions are starting to bubble over and it is not going so well. It is very early, the tensions have only just really arisen in the last couple of weeks, although they have been building for quite some time beforehand. Specifically with Huawei and the ability to do the 5G network and building for stuff here in Australia. Australia decided against that purely because of the security issues that might arise from it, and there have been a number of other factors along the way over the last sort of 2 or 3 years that have increased those tensions, and now we're starting to see them bubble over and they are starting to get a little bit nasty. So there will be more to come on this at the future date, but it's still too early to say if this is really going to affect our GDP in the overall, but we might have to keep an eye on things moving forward. Now the next one to sort of have a look here for you, I have got some calls about earnings season. So this should all come up on your screen right about now, so you can just have a quick read of it. But effectively, I've looked at this couple of the bigger ones in the market at the moment. The first one of which is Alphabet. Now their first quarter earnings were above what was expected. We've seen that the data period though was pre-COVID-19. So, or at least when the actual impacts of it have really hit home. So they do still have quite some positive ones. Now moving on from that, we've also had 3M. 3M, obviously they make post-it notes and a variety of other sort of household goods, and they have actually suspended their 2020 guidance. Now this isn't going to be uncommon. We are going to see this across a lot of calls and a lot of earnings reports that their guidance are basically going out the window. So that is not to be unexpected, but they have moved to a monthly reporting, which is a much nicer way of considering it. Because we might not get updates as we want, and when it's over a quarterly basis, this can affect your trading positions, then 3M have been nice or generous in the idea that they're going to offer them on a monthly basis. And this will include sales reporting and how much they're earning. There'll be a variety of different metrics that are involved in this. And we are starting to see some other companies do that as well. So they will be quite well off in the forward future to sort of be able to see where they're starting to get a pickup. Now, notably, 3M is also going to be looking at giving those data figures from a geographical perspective. So that will increase the likelihood of seeing where they are starting to have a takeoff and helping with the economy on consumer spending for moving forward. Now the next one is Caterpillar. Now Caterpillar, if you're not aware of them, they do manufacture or they rent or lease a whole heap of very large earth-moving sort of equipment. And so they have missed their targets. Now, again, a lot of companies are going to be in this situation. Think of your aviation sort of stuff and your hotel chains. There's going to be a lot of companies that are going to miss their targets in this earnings report. Now, they have said that they have pulled back and scaled back some of the stuff that they're doing, but they are expanding the projects that they have. And they are going to expand that sort of product list for themselves, but they are still referring to the idea that cash is king in that sort of concept, and so they are trying to stockpile as much cash as possible to try and buffer the storm. Now, the next one to sort of have a look at is Ford. And I've put up a slide specifically just for Ford because they do have a lot going on, and there has been like a number of things going on the last couple of years. Ford expects the second quarter to be worse than this quarter. And now I'm personally in line with that. I do think that earnings reports are probably going to be worse next quarter than they are this one, purely because in the previous quarter we've seen data come in at half pace. The beginning it was all good, but then it wasn't until we saw the spread of coronavirus which really came around the end of that quarter and the data that was in it. So that's problematic. The last month and a half was pretty negative. So seeing what happens now is going to be ultra important for the next earnings season, which is where my interest really lies. I find it will be probably a period of time where we can expect to see some wild swings. Now, when it comes to all of this, their share price has dropped a lot. You can see here on the thing, it's 42% year to date. That's massive. Really, for Ford, it's just problematic in the long run because it means they're not going to be able to get some of the earning potential that they might have had before already. Plus, their share prices are dropping down and their products are not going to be able to be released on schedule. They have said they're going to be delaying most of their new product releases over a year or more in some of the instances. So the new Ford Bronco won't be coming out for another year beyond. And so that's going to impact on where their share prices are actually going to go. Now, the other part to really consider in the Ford situation is that this will be the fourth consecutive year of negative earnings. That's right, the fourth. So that means in the previous 3 years, they've not had a good run down. It has been slogging itself down. If you have a look at a chart on Ford, which you'll be able to do on MT5 right now, you can see how far it's actually come down from the total value. And this is an important figure to consider because all of a sudden they hadn't prepared for a pandemic, much like the rest of the world, and now they've got this to contend with, which is problematic. Now, whilst this might be the case, they do have a lot of cash reserves, nearly $35 billion worth, and a lot of it has been raised via debt equity. So regardless of this factor, they do have to consider how much they've got taken on board as a liability and how much they're going to be being able to put out at the beginning of the new era or when we see COVID-19 finish. So in my mind, Ford might have some good opportunities coming up to get in at a cheaper price and hold those positions for a much longer time. Now, the next thing to sort of consider here is that there is a bit of a disconnect going on in the markets between commodities, forex, stocks, and real estate. You name it, there is some level of disconnect. This quote that came out, I'm just going to read it out for you now. I found it quite interesting, and I think you guys might as well. Now, the quote is by the chief economist at Asset Market. His name is Jason Thomas. Now, Jason Thomas has said, the economic policy is winning the battle for the hearts and minds of the market, but not for the arms and legs of the economy. Now, to translate that a little bit for you, the idea is that we're seeing huge amounts of stimulus never before seen go into the market. And that is pushing stock prices up and inflating them possibly beyond into an overbought sort of scenario. And then when we think about it as the economy spectrum, it's so far apart that that's not really what's happening as the boots on the ground. There are businesses going out of business. We have people not purchasing things on a consumer level. So there is obviously a big disparity between what's going on in the stock market and what's happening as the boots on the ground. So that is where I'm seeing a little bit of a disconnect, and there are a number of other disconnects, especially if you consider what's happening in the commodity market, like with oil, compared to what's actually happening in the stock market. You can just sort of make comparisons left, right, and center here and see that stuff has dislocated. Now, the next thing that I'm going to do is look at the pound dollar. We did have a request last night whilst I was conducting one of our webinars if I could have a look at the pound dollar and give a little bit of an observation on the chart as to what I think I can see going on. Now, on the chart that I've got here, I've just sort of put two trend lines for you to have a look at on the top side, indicating that we're seeing an acceleration for price be moving down. Naturally, the pound dollar has been in a long-term downtrend for a number of years, and this is no different today. It is still within those trends, it's still operating with them. The areas of interest that I have for it are, you can see the little blue box at the bottom of the screen there. Now, that blue box is sort of an area where I think is what we would consider a support zone. When price hits that area, it's going to bounce up away from it. which is what it's done so far in the last couple of years, and it's certainly happened again right now while we're looking at COVID-19. Moving on to the next chart though, you can see that box a little bit better right across the bottom of the screen and the areas where I'm interested in, but I am starting to see a thing called a head and shoulders pattern. Now, this is a daily chart, so it's a much longer term. I don't think it is ready for a trade as of yet. You'd want to make sure it is a confirmed head and shoulders pattern, but it certainly looks like the pattern itself, and at least in the early days. So ideally what we want to be seeing is we want to see price come back down below that light blue line I have on the screen and close below, and look for an entry around that point there. It might occur, it might not, but at this point in time it does look top heavy to me. I can see that it could likely go down further. Now, the reasons behind this on a fundamental side of things are that we don't have an end sight for Brexit. Naturally, that's been stagnated because of all the COVID-19 situation. We do have some interesting problems that have occurred with Boris Johnson, with him being diagnosed with COVID-19 and only just going back to office. We have seen a lot of issues on the political side of things, with the people not being very happy about how Boris Johnson and his government have handled COVID-19 so far. There's a lot of unrest because the entire country is shut down. They've been shut down for an extended period of time, which means that their economy is likely to suffer. And therefore, we could potentially see a bottom run, a move down on the pound dollar. Now, let's keep in mind that there's also a US side to this as well, and the US side is also not in a great position. However, they do have a huge amount of stimulus being pumped into the economy almost on a daily basis now. So that might keep things a little bit inflated and keep the strength of the US dollar side a little bit more up there. So I hope that has helped you out. If you have any questions about today's content or some of the stuff I've done in other videos, or perhaps it's something from the webinar, feel free to shoot me an email at talktoal@acy.com. And of course, like and subscribe to the video so you can get more great content from me in the future. Have a great trading day ahead.